What is it we all believe in? Bitcoin. It's like a religion at the moment, but what is it we all really love? It's the altcoins. Why do we love the altcoins? Bigger gains, guys. You've got a shorter period, you've got bigger gains. The rotation from Bitcoin to altcoins is one of the most difficult thing to do, guys. It's like picking bottoms and picking tops, nearly impossible. You might as well go and stick a lottery ticket on. So how do we know exactly when the best time to rotate into your altcoin bag is from your Bitcoin bag? Bitcoin's run nearly 2 years already, guys. It's had its bull run. The gains are going to be diminishing through the course of the bull cycle. And that's why the rotation in altcoin occurs. So all we can do is look at past data. Remember, markets rhyme, they never repeat. So we'll look at last cycle and the cycle before and see how that happened to try and identify what metrics we can look at to try and get a better indication, guys. It's not an exact science, but this time, this cycle is different. Why is this cycle different? How could it play out different? We've got lots of indications, lots to talk about, guys, because a lot of people today are feeling like this. Pretty crap. Altcoins are all down today. However, Bitcoin is doing this. So this is exactly what we're talking about. When do we need this to start coming down, and when do we need these to start going up? Let's dive in. Okay, so you hear me time and time again, markets rhyme, markets never repeat. So why does the Bitcoin market rhyme? This is why the Bitcoin market rhymes, guys. Each one of these lines here indicates the Bitcoin halving. At the start of this measurement here, that indicates the bottom of the previous cycle, and the end of this indicates the top of the last cycle. So just an example, you see from the bottom here, that's 100 or 1064 bars to the end of the cycle. It's 553 bars from the halving to the end of the cycle. And then we go through, guys, 1064 bars from the bottom to the expected top of the cycle. And if we measure the halving, we know that it's going to be 546 bars from the halving to the estimated end date. How do we know that? Because it did it in the previous cycle. How do we know that? Because it did it in exactly the cycle before. 1064 bars, 546 bars. So that is uncanny when you look at timeframes, guys. When you look at timeframes. However, does it mean it's going to play out again, guys? Because everyone expects this to be the end date. Everybody can look at this calculation and say, we've got an end date of this date. And trust me, guys, it doesn't happen like that. The smart money need to win. For the smart money to win, the retail need to be wrong. For the retail to be wrong, a lot of us need to get wiped out. So it's all about understanding the rotation, guys. Why is it different from previous cycles? So you can see you've got the exact time frame from the halving to the end. You've got the exact time frame from the previous bottom to the previous top. So that's the data, that's the time frame data, and that's why they rhyme, but they don't repeat. So I'm not expecting it to be the end date. Now, why is it different this time? Go back through the previous cycles and you can see one thing. So this line indicates the halving. So you can see one thing. You have the halving, and then you have a cool off, then you have a push, then you have the halving, cool off, and then you have the push. Then you have the halving, cool off, and then you have the push. This time, we had a run up into the halving because of the ETFs, guys. People knew in the background that these ETFs were going to get approved, and people were buying all the way down here, all the way up into the halving. And what happened? Did we get any kind of a correction when we got to the halving? No, not this time, guys. People kept buying, people kept buying, people kept buying. We had a little bull flag, an accumulative phase, and that was where people were accumulating for the next leg. Then this was the next leg. So the one thing that you can look at from the previous cycle to this cycle, we have got, just get rid of the stochastic on this one. We have got, guys, bearish divergence. So we've got a higher high on the RSI, and then we've got a lower high on the RSI, where we're putting a higher high on the chart. So that's indicating a divergence, guys. That's indicating that the price action and the buying power isn't backed up by the momentum on the chart. So it's indicating you need a cool off. Now, listen to me, guys. I've studied charts. I've studied so many charts, hundreds, thousands of different charts. The one thing that Bitcoin does that's differently to everybody else is it'll put in these divergences. It'll put in these ascendant channels. These are all bearish moves, guys. And then I see it time and time again break through. So that's why it creates the indecision, guys. And it's ultimately, is there a new surge of liquidity that's going into the market that's driving it? Because it'll just go straight up. And that's why Bitcoin's different. That's why it happens time and time again. So we're looking for the rotation to occur, guys. So we know exactly that the markets rhyme, they don't repeat. So why is it differently this time? Because the institutions are bought up into the halving, we accumulated after the halving, and then we had the second push up altcoins haven't done much yet, and we can see that when we look at the dominance. And I'd said, guys, when we looked at the Bitcoin dominance, I'd said one thing. Let's bring this up. Once we'd got a support here, it's already drawn on, guys. Once we've got a support at this level, we were expecting to come back up, test this as previous support to act as resistance to give us an indication whether the rotation from Bitcoin is going to start to flow into altcoins. It's not just Bitcoin into altcoins, it is stable coins into altcoins as well, guys. So it's like a double bubble. People have got confidence in the market. When they've got confidence in the market, the least risky assets, Bitcoin, USDT, USDC, they'll start surging into altcoins because people want more gains. People are fearful when they're in Bitcoin. People are fearful when they're in dollars. When they've got confidence in the market, people fly into altcoins. Retailers start buying all sorts of crap, and then the price will just keep going up. So we expected this to happen, guys. We've been monitoring this, and this is going to be a good indication for me, because if we get a rejection at this point here, anywhere below 58.48%, and we get a rejection, this second surge in altcoins is going to be bigger than the first surge in altcoins. So what's that going to mean, guys? Let's have a look. Ultimately, this is going to be my halfway point. 20.01% to the downside. So if we drop 20.1% zero to the down, 20% to the downside, guys, that'll give the hugest indication of surge of equity into altcoins. And you'd think that moving from one asset into thousands and thousands of assets wouldn't do much. But when you are 60% of the total market cap, that's the thing that drives anything within this space. So a rejection at this point would be good for altcoins. A rejection anywhere at this point is going to be a good for altcoins. It's going to show that people have got conviction. Alts are going to be outperforming Bitcoin. That's what's happening here, guys. When we get a drop in dominance, altcoins are starting to outperform Bitcoin. Now, that can mean one of two things. It can either mean that Bitcoin is going up and altcoins are going up higher, or it can mean that Bitcoin is dropping and altcoins are dropping less. So that's the two things that we can get, or the two indications we can get from the difference in dominance, whether it's going up, whether it's going down, what the rest of the cycles are doing. And then the next one, I've been talking about this, guys, it's the Bitcoin ETH. ETH is the most important cryptocurrency for me right now, because the rotation from Bitcoin goes from Bitcoin into the second least risky asset. And that's Ethereum, guys. So the second least risky asset's Ethereum. And when they go into there, they go into Ethereum because Ethereum is going to give them more gains than Bitcoin. And you can look at the ETH Bitcoin chart and see that the rotation is starting to occur. Once we get a break and once we get a close above this trend line, that's indicating that ETH's going to start outperforming Bitcoin. Then you'll start seeing this drop in dominance. Then you'll see people converting out of Ethereum into higher risk assets, i.e. Solana, your AVAX, your top layer ones, your BNBs. And then as the rotation occurs, you'll start going from narrative to narrative to narrative to narrative. Why do you think it runs from narrative to narrative, guys? Because liquidity into the market. So liquidity can't all go into the market and everything all go up at once, because you'd be looking at 20, 30, 40 trillion market cap. That's not going to happen this cycle, guys. So the rotation needs to occur from narrative, for example, from AI into meme coins. Why would that need to happen? Because once AI is pumped, then AI needs to cool off. When AI is cooling off, what's happening? Sell orders, people pulling money out of liquidity into the AI sector, or from the AI sector, then moving it, for example, into the meme sector. So the rotation comes out of one asset class, then into another asset class. So it all just goes through from risk to risk to risk. And then when you're at the end of the crypto market, guys, that's where all the crap's running. That's where the biggest gains are. That's where euphoria hits. It's where exchanges crash, unfortunately, and that's where the most people get wrecked. So I'm going to try and do it a little bit more conservative, but I'm watching this Ethereum as the front runner to give me the first indication that we are going to get some kind of an alt season, a real alt season, guys. And then this is the next one. Now, I'd said before, once we've got a breakout of this bull flag, this is the total crypto market cap, excluding Bitcoin, excluding Ethereum. I'd said we were going to get a surge of 465 billion into the alt market. That's exactly what happened. Where did I say we were going to get rejected? At this level here, this red rejection zone. Why? That was the previous all-time high. Now, people are talking about alt season now. People are talking, we're in alt season, we're 5 days, 6 days, 7 days into alt season. This is my measurement of alt season. Once we get a break, once we get a close above total 3. So just to put it in perspective, guys, this is what I'm trying to catch. I'm trying to catch this. There's the break from the previous all-time high to this high here. That's what I'm trying to catch, guys, and that's where I'm going to be heavily scaling out my positions during that point. So you can see when you look at the period of the bull run, that's only a small portion of the bull run, but you had this big crash in May. I'm trying to avoid that, guys. I want to be scaling out and I want to be taking advantage. If we get a second leg and if it plays out similar to last time, I want to be taking advantage of that second leg by having capital on the table. Am I going to be putting it all back in? No, guys. I'll be putting a small amount in, try and ride with euphoria, more of a gamble one. I'll be putting 10, 20% of my position in. And then I'm going to be banking the rest, guys, because ultimately what I want to do is be successful and have money at the end of this crypto bull market to be able to forward look, put it into other assets that are going to perform in a bear market and then start the rotation again. So that's what I'm looking for. So to put significance, guys, that is on the previous one, that was 168.12%, which was 612.36 billion. So to put it in perspective, this is the run up. This is the run up of the previous cycle. That's the run up of the previous cycle. We haven't broken all-time high. So from where we are now, just to put it into perspective, guys, this little run here is more comparable to this little run here. It's absolutely nothing, guys, in comparison to what the next surge of alts. This is the previous cycle. When we get this in the new cycle, that's where you're going to really see the acceleration, and that's what we're trying to look for. So the video is about when's a good time to be rotating outside of Bitcoin into altcoins. For me, if anybody's in Bitcoin, and this is not financial advice, for anybody that's heavily in Bitcoin and they want to start diversifying out of Bitcoin slowly by scaling a position into altcoins, probably now isn't a bad time. So that's what I'm looking to do, guys. I've got an allocation of Bitcoin. I'm going to be looking to try and capitalize on that allocation of Bitcoin by doing the rotation myself from Bitcoin into altcoins and then back ultimately into Bitcoin, because that's the aim of the game, guys, to end the bull run with Bitcoin and dollars, the two assets that are going to outperform during the course of a bear market. Well, to be fair, guys, that's complete bull. Bitcoin's not going to perform in a bear market. Dollars will outperform in a bear market. What you'll see with dollars is you'll see dollars not exactly go up, guys, because you've got the inflation factor and the crap and the mechanism, the crap that they've got built in. Let's call it the tokenomics. The dollar tokenomics suck, guys. What's going to happen is the rest of the fiat currencies are going to bleed. The dollar's going to outperform the pound. The dollar's going to outperform the yen. The dollar's going to outperform the Canadian dollar. The dollar's going to outperform pretty much anything. And what it means, guys, is the dollar is not dropping as hard as the rest of them. It's still going to be inflationary. It's not dropping as hard as the rest of them. But ultimately, the aim of the game as far as crypto is concerned is to gain the most amount of Satoshis possible. So by converting into altcoins, getting bigger gains out of altcoins, converting out of altcoins towards the end of the cycle, back into Bitcoin, back into dollars to have capital, as well as the thing that we're in the game for is Bitcoin. That's what I want to be doing, guys. So that was a long-winded end. If you did enjoy this video, let me know if you want more videos like this, guys. More traditional technical analysis videos that are more on a macro scale, looking forward into the next 9 to 12 months. Let me know in the comments if you want more like this. So if you did find it useful, don't forget, subscribe to my channel. Help me out here. See if we can get 8,000 by the end of the year, and I'll see you tomorrow.